Good morning, good morning, everyone. I hope you're having a wonderful Wednesday. Hope that you and your families are just fine. And thank you for tuning in. Remember, I'm here to support everyone um, if you're doing a transaction. Um, Today, we're going to be talking about a very interesting topic that hinders and prevents a lot of us to do anything, right? And that is your credit report. Many of us don't even didn't know we needed credit. Believe it or not, I get questions all the time. But before we get into anything, let's start with our intro. All right, guys. So, like I mentioned, we're gonna be talking about credit. Why do we need it? Why is it important? And the do's and don'ts. And believe it or not, there's a lot of people that do more don'ts than do. Um, I currently have a contract going with a client. Let me move this camera. Normally, I have a contract with a client that they buying a new construction, a brand new home, had a great deal, great rates, um, and their daughter got into a car accident, and the car was not, you couldn't save the car at that point. So, they, they dumped it, and they had to go and purchase a new car. And if you ever purchase a home, that's a big no-no. So that's, yeah. And they still did it. They didn't tell nobody. They just went and did it. Um, uh, uh, and it hurt them, but didn't hurt them enough to stop stop their purchase. Luckily, thank God. But normally, this would affect your credit. This will affect your transaction really, really bad. So um, you got to be careful when you purchasing a home. You need to tell your lender, you need to tell your realtor what's going on, um, so they could advise you. Okay, because normally it's don't purchase nothing big when you're purchasing a home. Okay, because at that point you want to keep your credit as intact as possible. Okay. Guys, if you have any issues with your credit, if you currently in the process, drop them in the comments. Even if you're not live right now, I could always come back. I will get the notification to see if you have any issues. Of course, just keep in mind that I am not a credit repair guy. I'm just gonna be talking the general stuff, how to prevent from things from hurting you more. you know so that's the whole goal. But yeah, guys, if anyone right now is in the market purchasing, or even if you're trying to sell a house, and if you listen to this right now, tell me how's that going. Drop it in the comments as well. Let me know how's it going. How's the experience? How long you've been trying to sell your house? How long have you been looking for a home? I know that if you're a buyer, you're probably taking your sweet time. And I'll tell you, it's not the market. I could say it's you, because you have options right now. You have quite a few options. So you think that you're gonna shop around, take your time, um, and I could tell you probably say no, that's not true. That's not true, Dany. But I could tell you that's definitely true because um, if houses were flying out the window, you will be behaving a little bit like, oh no, I need to find a house because you know they're not giving me time to even realize or not or to choose, right? So you would choose like, I like this house, boom, it has red doors, I like red doors, let's go. But now since you have time, you're taking your sweet time, you know. Um, so yeah, just think about that. And if you're a seller, you're probably frustrated. You're probably frustrated that your house is not moving. But guys, but nevertheless, hope you get your stuff. Hope you find your house. Hope you sell your house. Nevertheless, um, if you want to share how's the market in your neck of the woods, just drop it in the comments. I'll be more than happy um, to hear all about it and share it to the world. It's an experience. It's an experience that it should be uh, a pleasant one, and it should be good. As long as you have a good realtor, you should be fine. But nevertheless, let's get back to what we're here to talk about, and that is your credit. Let me switch um, to what I'm gonna be sharing with you today. All right, there you go. Let's. I'm pretty sure you guys don't want to be. Just put this on the big screen. All right, all right. So let's before we get into whole details, it's understanding your credit. Or I mean, um, if you really need, if your credit is really, really, uh, let's just show. So this is the credit is it's a like a numerical ranking system, right? Um, it starts from 300 all the way to 850. Um, very few people are in the 850, but nevertheless, it's 300, and then you gets a little bit better at 580, and then it gets even better at 670, and then you're really good at 640, and then 800, and then the max is 850, right? And it tells you right here a little bit. You may have very little chances. Let me zoom this so you guys see it. It says you may have very little chances of securing new credit. You need two steps repair. Yes. So if you're in the bottom, you definitely need some work. Um, Fair enough. You can still get better credit. And then 670. It says the sign of a financially responsibility consumer um, of a low in credit rates. Right. So basically, the whole purpose of this is for you to know. It's for the person that's gonna lend you money, how good of a person you are when it comes to your financials, right? If you're responsible, if you pay on time, and so forth, right? This is the system that they use. Okay, here in America, this is the system that is being used to say whether you are uh worthy enough to receive the amount that you're asking. That's either for a personal loan, that's either for a credit card, if you're trying to get a car, if you're trying to buy a house, anything that has to deal with credit, right? So what are the factors that take in place, right? So a big chunk is payment history. This is why they always tell you don't miss a payment. Don't miss a payment. Make sure you always pay on time because it has 35% of of the effect. So if you miss one payment, you're gonna see your credit score drop, and that's what we don't want. And then after that, you see the amount owned. Okay, the amount owned is basically um, all of the all of all of the money that you need to pay back. Okay, so you want to make sure you keep that under control. Um, Length of history, that's basically how long you had this credit, right? Um, it's very important. The more history you have, the better. New credit, um, so it's self-explanatory. Every time you open a credit card, every time you open a loan under your name. The type of credit. Remember, there's more than type of credit. Like I mentioned, there's personal loans, there's credit cards, there's car payments, there's house, there's investments. Any other investments. So this is basically the type. This is what affects, right? If something happens, something goes wrong here, then this it's gonna hinder your credit score. It's gonna go down. It's gonna go down. Okay, what we trying to do, in all reality, we trying to stay above 600 and try. That's all you need to do. I would say to stay higher than 650. Now, if you asking me, Danny, but where can I see my credit? Okay, where can I go and see my credit score? There's apps. If you have a phone, you could let me see. If you have a phone, you could easily go and view your scores there. I know that Capital One does it for free. There's an annual report as well. Um, you can see your credit for free. A hard pull, you can see a hard pull for free. There's an annual report. You could go to Xperia. They do it for free. What else? And I think some credit cards that you have give you the report for free. I know that American Express as well does it. There's quite a few that do it. But if you want to look at your credit like every day to make sure that things are being accurate, you might want to go to Credit Karma. They do it. You could go there and check it, and don't rely too much on that score. Another thing that you're gonna have to understand, that there's different systems that grade your score, because you might go to, let's say you go to Credit Karma, and then you go to Bank of America, and they both give you the report, and then you go to American Express, and when you look, like, the numbers are not matching, right? So this is what you need to look. Why? You need to look at their system. What type of system are they using? Are they using the FICO system, FICO, or are they using a different system? I'm gonna tell you right now that Credit Karma uses a different system. That's why you always most likely will see a higher score in Credit Karma compared to others, right? Another thing that you should be looking at is which company they are using to report. Is it TransUnion? Is it Equinox? Or is it, what is it? I forgot. The TransUnion, Equinox, and Xperia. I'm not sure of the third company, but which company are they reporting it? So that's why I tell my clients, look, get the Credit Karma app. This way, don't look at the number, right? Don't look at the number. I mean, you're gonna look at it, but just ignore it and see. Credit Karma gives you a um, a site. It gives you an option to see what is hindering your your credit, and look at that, and it's gonna tell you, like, if you want a higher score, what you should do, and work on those things. Maybe you had more than one pools and stuff like that. You probably have more than four, and that's what's hindering. So it's all a matter of waiting, reduce your usage of credit, and that might be another thing. But with that being said, I think I'm going into what we are here to talk about. Um, and this way we could focus on the things, on the do's and don'ts. Oh wait, where is my? Oh, here you go. Because what we want to do is at this point we want to establish the credit, right? You already have your credit established, and now you want to fix it. If you don't have credit established, um, then you have to start from the bottom, and sometimes that's even better because then you don't have to fix everything that you have done to damage it. And you also you need some patience because this is not going to get fixed from right away. Okay, so it's pretty easy, guys. How to improve your credit score. Don't shy away from it. Let me zoom this so I could give you more. Okay, guys. So here's four things that you could easily do to improve your credit score. Right, paying your bills on time, and we already know why, because 35% of it's your score. Um, I'll tell you this: if by any chance you are falling into a financial situation and those monthly bills are coming, what do you do? Do you pay your mortgage or you pay your credit card? Right? That's a very, if you think you know the answer, drop it in the comments, or if you think otherwise, let me know. But the correct answer is you pay your mortgage. You definitely pay your mortgage, because it's gonna have a greater impact on you than your credit card, because the credit card payment will go away. The late payment will go away, but it's gonna get, I think it's about 2 years, right? It's gonna take 2 years. But with the mortgage payment, a lot could happen in 2 years, and you just having that late payment, it's gonna hurt you more. For example, let's say you purchase a home right now and you bought it at the highest rate, let's say 7%. And then 2 years pass by, you got yourself together, and interest rate drop. And then you try to refinance. You might not be able to refinance because you have that late payment. Okay, simple as that. I mean, yes, there are other programs. Yes, there's always a way around it, but it's gonna be more work just because of that late payment, compared to if you have the same late payment on a credit card. It's just more easy to handle. Just, this is so you can know. Now, moving on. Keep credit utilization low on less than 30% of your available credit. Again, why? Because these are the two things um that have more impact on your credit than anything else. Okay, so I know sometimes we get really excited on what to spend. So, like, we just want to spend, especially somebody that you just came out of college. I remember my days. I got into college. They gave me $1,000 credit limit. And boy, I mean, back in the days, $1,000 went longer. But yeah, it was hard keeping it low. So imagine $1,000, 30%. I believe that's like, how much is that? Like 300? Is that 300? Or is it more? Or is it less? Let's find out. I'm not a math whiz, so don't judge me. Yes, 300. So I was right. Um so yeah, so imagine you college keeping that credit card under 30% usage, impossible. But it's more about discipline. Yes, you're gonna go over sometimes, and that's fine. But make sure that you're working on bringing it down as soon as possible. Um, because you use building report. All it is building report. This is the way that this is the way how the system works. I'll say this: if you from another country, and let's say like I know that in Central America and South America, they don't come with this type of they don't have this type of system. You know, even if you and I know that in China or Japan, they have like a is they also implemented like your behavior in society reflects like a score. It's crazy. But if you come from a different system, like drop it in the comment, guys. I want to know. That would be interesting. You know, there's countries that don't even have credit. You know, if you have the money, that's fine. You know, but and I believe that's a hard thing when people come from their country to here and they want to establish, they don't understand the credit system here, you know, and so they get annoying. They just feel like it's an extra step, and but those are the rules, you know, and it's for everyone. I mean, unless you have cash, right? If you have cash, and you could care less about how's your credit and stuff like that. But nevertheless, let's move on to number three: increasing your credit limit. Request a limit increase, but don't use the extra credit. I didn't know this until I was later on in my years, because I they used to offer credit limits, and I just saw it like, oh, they just want me to spend more money. In reality, they do, but they notice that you as a person are very responsible, and so they want to reward you with this. Just be careful, because it's like a trap. It's a reward within the trap. You got more money, are you really gonna use it? You know, so you got to be careful. Only use it if you are in an emergency. You know, like I said, it's easier to get rid of a credit. It's easier to handle a credit card than your own house, you know. But yeah, number four: diversify your credit mix, different types of loan. Yes, like I mentioned, your loans, your credit card, this all of this will help your score. This all of this will help you um keep staying up there and having a better score. All right, so let's do the don'ts, right? Okay, what will damage your credit score? And this is like very important, because most of us think that it doesn't go down, but it does go down, right? Missing a payment, even late payment can drop. Okay, look at the amount. Look at the amount. 50 to 100 point. That's insane, because let's say you are in the middle of purchasing a home and you miss a payment. mm, that could make the difference from a good rate to a less favorable rate, and even not being eligible to purchase the current home. Maxing out your credit cards, like I said, like I know they want to increase it, but just be careful that you keep it under, right? Number three is something that I didn't know till later on as well. In my late 20s, I believe. Um, Once I lost control of my credit, um, I thought the best thing was to close my credit cards and just pay them off. This way, the interest wouldn't accumulate. Well, I was totally wrong. Okay. Don't do that. Okay. Do not do that. Okay. Um, closing your closing your credit cards will have a negative impact on you big time. We do not want to do that. So um, unless you have to, you know. But if you don't get that yearly charge, I know there's cards that charge you yearly, but they charge you yearly because they bring a lot of rewards on it. So make sure you understand that commitment. Okay, so but if you're starting off, I think that you should just grab one that doesn't have no annual fees, and you should be fine. What else? Applying for too much credit, multiply hard inquiries. Yes. A lot of inquiries. So there's a soft pull and there's a hard pull, right? Always ask. Always ask. Don't be scared. Don't be scared to speak up. This is for everything. Somebody says, "Oh, you're gonna need credit." That's fine, and you say yes. Always like, "Oh, so excuse me, is this gonna be a hard pull or a soft pull?" They know what they tell you. So every time you're gonna apply for a credit, it's gonna be a hard pull, right? There's very, very few exceptions about it. There's also that every time, let's say for example, if you go purchase a car, you got to be careful because these guys will just start pulling your credit. Normally if it's for the same subject, like let's say you go to one dealership and you go to another dealership and you have them both pull your credit, um, it's gonna count as one, but there's a time frame for that. Okay, it doesn't mean because you go on December and then you go on January, it's still gonna count as one. So there's a time frame. The closer you the closer, I think it's like a week or two. But yes, you want to make sure you keep that within the time frame. So but yeah, guys, this was just a quick chat. Things to take action, right? This is the hardest thing because we tend to forget about it. So check your credit report annually. You could go to credit. Yeah, you see this the credit annual credit report.com. You could go there. You can check it. It's for free. So just to see that everything it's fine. Set up a payment. Stay on track. Yes. Oh, I think we tend to forget. You get caught up, you do something else that has your attention and you forget, and then it hits it right there, you know. uh Keep your credit utilization low. I know that as long as this goes up and down, you should be fine. And of course, subscribe to my YouTube channel, and so I could help you on your next purchase. Guys, it was a small talk today. I hope you find this useful, helping you out with everything. If you're looking to purchase a home or not, it's always important to keep your financials in order. But yeah, with that being said, guys, that will be all for today. Hope you found this useful, especially if you're looking in the market to purchase. You should definitely know that keeping your credit score intact in the process is very important. All right, guys. Until next time, next Wednesday, I'll see you all. God bless, and hope you enjoy your Super Bowl Sunday. I If you want to know my prediction, I man, this is the Chiefs. I don't know. I don't want them to win, but nevertheless, I will want the Eagles to win. I really don't care. I'm just hoping for a good game. But until next time, God bless.